Imagine waking up in the morning feeling completely at ease, knowing that while you were sleeping your investments were hard at work for you. Picture this. Your bills are already covered, not because you worked overtime but because your money is earning more money, even as you rest. There's no blaring alarm clock, no stressful commute, and no boss waiting for you. Instead, you get to watch your bank account quietly grow, all while you enjoy your morning coffee or take a peaceful stroll at sunrise. This is the true power and appeal of passive income. For many, dividend investing is the tried and true path to achieving this dream, earning regular payments just for owning shares in great companies. When you own a piece of a solid, reliable company, they reward you by sending you a portion of their profits. It's like getting a thank you check simply for being a shareholder, and it can add up over time. But with all the ups and downs in today's unpredictable market, you might wonder, is it still realistic to live off dividends in 2025 and beyond? Can this strategy really stand the test of time? In this video, I'll break down the top dividend stocks for building serious passive income, and I'll share a powerful strategy that could even double your returns. If you're ready to unlock the secret to getting paid while you sleep, let's dive in. Dividend stocks are your safety bar in a roller coaster market. When prices drop, dividends are real cash in your account, no matter what. You're investing in established, profitable companies, not risky startups. These companies have strong balance sheets and a history of sharing profits. We're after dividend aristocrats and kings, elite companies with decades of growing payouts. It's about stability, not chasing unsustainable yields. This approach turns investing into a predictable income-generating machine, and our first pick is a perfect example. Let's start with Johnson & Johnson, ticker J&J. They've increased their dividend for over 60 straight years, through recessions and market crashes. Even after spinning off their consumer health division, J&J's core in pharmaceuticals and medical devices remains rock solid. People need their products in any economy, creating stable revenue and reliable dividends. During recent market turmoil, J&J stood firm while others faltered. It's the steady foundation for any passive income portfolio. J&J is a classic sleep well at night stock. Next up is Realty Income, ticker symbol O, famously known as the monthly dividend company. This real estate investment trust has built its reputation on delivering reliable, steady income to shareholders, month after month, year after year. Think about it. Most of your expenses like rent, utilities, and groceries are due every month. So why not have your investment income arrive just as regularly, helping you match your cash flow to your real-life needs? Realty Income owns and manages thousands of recession-resistant properties, leased to essential businesses like Walgreens, FedEx, and 7-Eleven. These are companies people rely on, no matter what's happening in the economy. Their triple-net lease structure means tenants pay for property taxes, insurance, and maintenance. This setup makes Realty Income's cash flow highly predictable and reduces unexpected expenses for the company. Even during economic downturns, Realty Income's rent collection rates remain impressively high, so dividend payments to investors keep flowing, providing peace of mind in uncertain times. Over 100 consecutive quarterly dividend increases prove just how reliable this company is, even through recessions and market volatility. For anyone seeking consistent bill-paying income, Realty Income is about as close to a financial utility as you'll find, delivering monthly cash flow you can count on, no matter what life throws your way. PepsiCo isn't just a soda company, it's a global snack empire hiding in plain sight. While most people know Pepsi for its iconic drinks, the real power lies in its massive portfolio of beloved snack brands. Household names like Lay's, Doritos, and Quaker Oats aren't just popular. They're the backbone of PepsiCo's profits and long-term stability, fueling growth year after year. Snacks and drinks work together, balancing each other out and keeping cash flow strong, no matter the season or economic climate. This smart diversification is why PepsiCo has managed to raise its dividend for over 50 consecutive years, rewarding loyal investors. PepsiCo doesn't just rest on its legacy, they adapt to new trends, acquiring brands like SodaStream and constantly innovating to stay ahead of changing tastes. When you invest in PepsiCo, you're not just buying stock, you're owning a piece of daily life, enjoyed by families and friends across the globe. Their wide economic moat and global reach mean reliable, growing dividends that investors can count on for the long haul. It might seem like a boring stock, but PepsiCo quietly delivers exciting, steady passive income, making it a powerful addition to any portfolio. Here's the twist. Don't just collect dividends, reinvest them. This is the magic of compounding dividends. Buy more shares, which earn more dividends. Over time, your income snowballs exponentially. Use a dividend reinvestment plan, DRIP, to automate this process. Supercharge it in a Roth IRA, where growth and dividends are tax-free. Every dollar reinvested grows your wealth faster, untouched by taxes. Quality dividend stocks plus tax-free compounding is the ultimate wealth-building combo. This is how you turn passive income into generational wealth. We've covered 3 pillars: J&J Realty Income and PepsiCo. Each offers stability, reliability, and a history of rewarding shareholders. The real game changer? Reinvesting dividends, especially in a Roth IRA. This transforms your portfolio into a self-fueling wealth machine. Now you have the blueprint, quality stocks, and the strategy to maximize them. Building passive income is a marathon, but starting now puts you on the fast track. Which dividend stock is on your watch list? Comment below and don't forget to like and subscribe.